It's an absolute delight to talk to Manav Chopra, Director of Technical at Nuvama Institutional Equities. Manav, great having you. Thanks so much for taking the time out.
Thank you.
Now, Manav, you somewhere around mid-Feb, end Feb, you brought out this possibility that this brutal sell-off might be at some point of time coming to an end. Now, we've seen a bit of a bounce from 22,000. We kind of defended that strongly.
Right.
Is this the bounce?
I would say, the markets right now, since last couple of weeks entered into the final capitulation stage. That's one very key criteria to understand. Markets usually don't bottom at certain giveaway or the support levels. They usually see a throw off. The market sentiment comes to the extreme, and there are multiple sentiment indicators that we have embedded in our systems, which have called for historical low sentiments that the markets have recently validated them. Give you an example like Nifty 500, 86% of stocks were below 200-day average, which is a very rare thing. 92% within Nifty 500 were below 50-day average. These are some historical low events which has played out. In recent sessions, 17 consecutive sessions of Nifty 50, the index was below 5-day average. This is the 17th. So these are some very extreme scenarios which have played, which has further validated that this is not only the capitulation, but coming at the fag end stage. So the point is, whether are we bottoming at 22,000? I think a probability of few percent here or there is there. But what important is that, are we in a bear market, or is this the intermediate correction in the larger bull market? So for me, we witnessed an extended intermarket the correction phase in the larger bull market. For my sense is that we have entered not only into the intermediate deployment zone, but also into the long-term deployment zone. We are strongly calling for a deployment into the large caps and select high beta names going forward for the clients. And our base case is that, basis on the capitulation data that we've derived, the index should see a rally of 14% in next 2 to 3 months. I'm talking of the Nifty 50, which would give us an upside of 25,000 to 25,300. And historically, as per our backtest data, in last 3 months, we haven't received any negative returns. So, coming into that scenario, it's definitely a very high probable deployment zone for us. And that's what we are going very aggressive with the clients for aggressive deployment at these levels. And going forward in the next couple of months, you will definitely see very strong rally to emerge, mainly led by the frontline names and some pockets of high beta. Important to note is that even at these levels, there are very extreme shorts. And in the last few sessions, despite of this pullback, the shorts have not yet been squeezed off. I think there'll be a little bit of wall of worry that the markets will carry forward. But as the market takes on a strong breath, I think you'll be seeing a snap of a move on the upside.
Okay. So, Manav, I have a follow-up here. And we'll come to the Nifty levels and, maybe those pockets as well. But what is leading to this is because today, for example, there's a confluence of factors which is doing this magic, right? DXY, sub 105, oil below 70.
Yes.
Fundamentally, the RBI has made some liquidity moves as well, which is a big shot in the arm. So is this global in nature and are there intermarket linkages, or is this very India specific?
I think to our luck, a lot of things have also come together in a confluence. The Indian markets have witnessed the decline not because of any global meltdown as such, but largely because of shift from emerging markets to the developed markets, because of the US rally, the dollar index getting stronger, the rupee getting weak, all that parameters played for us. But what currently has happened and what we are calling is that dollar has stopped out. And eventually we will be seeing a shift on the lower side on the next coming few months would be like 102 and the upside of 107. So which is a very comforting zone for us. Not only that, with the decline in dollar index, even the US 10-year yields has softened a bit, which further adds to more comforting factors for the EMs to come in. So I think with a very strong outperformance that the US has already played out, I think in next few weeks or months, you will be seeing a shift of developed markets with mainly the funds coming from the US markets getting into the EMs. When we are also looking at the MSCI Emerging Market Index, that has already given a breakout. Obviously, there might be some direct flows which might impact China over India, which could be a possibility. But the passive flows that will come to India, which has been the biggest worry of FIs, outflows, relentless money going out of India, I think that will eventually start to cool off and come in us in the direct way. So my base case is that the dollar has stopped out. You will be seeing levels of 102 on the lower side going forward. And this time around the Euro USD, I think in the past, whenever you see the Euro USD moving And right now, after October 22, this is the first time that the Euro USD has seen a very, very strong surge. I think these global macro factors with the crude is going to act as a very sweet element for the Indian markets in general, and in commodities, energies as a cycle as a whole.
So let's talk about how do you play this, right? 14% in 3 months is a big call. So how do you play this, Manav? You've suggested large cap, you've suggested high beta, but are there pockets which you like, and are there pockets which you'll stay away from?
Fair. So currently we have taken a big call on metal as a sector. We've called it as the hidden gem of 2025. And if you ask me, this is the call that we have initiated already. I think in the absolute basis, the index has just rallied 5%. But what are we looking into it? We are looking for the commodity cycles to come back with the emerging, especially we've seen historically whenever the dollar index is below a certain level, the commodities usually come up well. There is no concern in the larger time frame for the dollar index in general. Emerging, also like I discussed about the MSCI emerging market, this angle is quite favorable for the commodities. Specifically, the another aspect of metal sector, it's one of the most under-owned sector when you look at Nifty 500 versus the long-only ownerships. Okay, so long-only ownership is very subdued, and FIs has very minimal ownership in that. The recent decline we witnessed in the high beta was in real estate, cap goods, infra, because of heavy ownership. So this sector itself is very under-owned, and the kind of tailwinds that we are seeing on the macro front which is coming in, I think it will just act as a very strong chase coming from the metals, which we have actually seen in last few sessions. But largely speaking, I think this is just the first stage of the larger setup that we are looking into it. I have given a base case of 30% upside on the metal index, but very much likely I will not be surprised to see that if the sector front we are seeing a 30% move, the stock specifics can be anywhere between 40-50%. My top bets is Tata Steel, Hindalco, followed by SAIL, NMDC, but largely very, very constructive and bullish on the metals as a space.
30% for the index.
Yes.
This is over the calendar year 25, you reckon?
Absolutely. And in the past, whenever this sector moves, the first leg is always a very snap fast move. Don't be surprised to see if there is like a 20% in next 1 month or so.
Wow.
That is amazing. But typically, Manav, when you see the metal sector moving that way, there are China triggers involved. What are those that you will be looking out for, or what are those that our viewers, investors should look out for? Because likely will that be the trigger? Is that something that?
I think the market has its own sense. When I'm looking at the dollar index, besides that, when we look at the international aluminum charts, or we look at the copper, copper has actually recently witnessed a fresh breakout of its important weekly resistance level, and this time the breakout is not coming because of supply constraint, because of demand renewal, right? And also when we are looking at the chart of iron ore, which is roughly also consolidating at the level. So when all these parameters also sees a shift of another 10%, I think as a whole you will see a lot of fuel coming back in, and which will be very supportive for the metals as general.
And last quick question with regard to BFSI, because that also features on your overweight list. Yes. And it's already done a fair bit of outperformance versus the index itself. You have some heavyweights which have done that. Bajaj Finance, what a stark outperformance that it's had over the last 3 to 4 months. Kotak HDFC also holding solid. So within BFSI, is there a preference there, and why BFSI? What will the triggers be?
Fair. I think like I said, there'll be another understanding to it. When we look at, if I take you back just a few years back in the BFSI, I think largely 2022 and 23, FIs have been the net sellers of BFSI in general. Okay, and it's reasonably under-owned when we've seen this volatility space play out. Secondly, we have seen a very strong leadership coming into BFSI in last few weeks, and more so in a lot of under-owned names, like namely like Kotak, your BAF, Bajaj Finance, and some certain pockets of private banks which have done very well. Recently, HDFC Bank and ICICI. I think going forward, BFSI will be the leader which will be taking the markets higher. It has seen a good outperformance, but I think financial as an index, if the Nifty is moving towards sub 25,000, it will need support from the other sectors, but BFSI is the space which will cap your lower side, but give you that kind of a support going forward in the near term.
Nifty, large metals, large BFSI. I'm hearing you talk about the large caps. The pain for the market has been the mid caps and the
Yes.
small caps.
Yes.
Do you see SMIDs bouncing back, or will SMIDs be laggards?
Oh, okay, so in the first leg, yes, there will be a near-term good amount of a rally that will come into the SMIDs. But when we look at the mid-cap 100 to Nifty ratio charts or the Nifty 500 to the Nifty 50 charts, they have actually violated some key support levels, and there is a possibility they will get into a broader time correction phase, which will lead for more, some pockets of correction to continue. Let it be your industrials, your power, maybe your select auto anchs. These segments will still continue to deteriorate along with real estate. Certain pockets will do well, but I think the time for the SMID or the investment in SMID would probably taken at the later stage. But at the moment, if you're getting a reasonable rally, certain large caps with high beta is what we recommend.
On that note, on that bullish tone, Manav Chopra, thank you so much
Thank you so
for
much for
speaking to us today.